So if you look at the, natural nominal neutral rate, right, at 3.5% around there, and, a yield curve that is, a steeper yield curve every time the Fed cuts rates, I think 4.5% is okay. 5%, I think we get to a point where real rates, which is the nominal minus the inflation, get very restrictive, which is also what happened in October 2023. And that led to the mean reversion down. The reason I say real rates at those levels of 5% 10-year is restrictive is because of just the overall debt in the system, right? Whether it's, the public debt in the US or just overall global debt. So if beyond a point, the markets will pull those yields down because funding this kind of a debt and this kind of a deficit at such high yields is not going to be possible. I think for me, between somewhere at 4.5, maybe markets tend to overshoot, can happen, but then that kind of pulls it down. Everything else being equal, if we have 60% tariffs, I don't think that can happen. That can change the equation, but we will really have to see what happens on all the policy developments post the elections.
Okay, so Jitania, I wanted to help viewers do a little bit of translation here. We've been talking sort of around the whole Trump trade. What we're talking about here is if Trump wins, right, and the latest polls suggest his odds or chances are getting better, all right, I think that's one of the reasons why I think put a bit of pressure on the market and caused yields to jump. It means higher yields. How high, we don't know. But that basically means a couple of things. One, potentially stronger dollar. And two, if he wins, nothing's going to happen with the deficit or with the debt. Record Treasury issuance is going to continue. That is going to help support yields and potentially be inflationary as well. Is that what you're? Is that the sort of key takeaway? Am I putting it together right?
Yes, I think that is what the market's pricing. But I just, let's take a step back, right? In 2016, when Trump came to power, there was a complete reset in markets because no one expected that presidency, right? Now there is still a 50% probability. So the markets are pricing in that at this point. Now, can this trade really continue for the longest time? I don't think so. I think there will be a reset. So it's important to keep in mind, and also keep in mind, despite all the tariffs that were imposed on China in 2017 and onwards, the export prices coming out of China are the lowest compared to any other country today, given all the excess capacity. So we really have to think about, one, the market expectation and what's getting priced in and what the reality is, and keep in mind that this time it's not going to be a total surprise where you need a full reset like we saw last time.
All right.